right. So I've got a little kind of interesting trading tip, something I've done since 2001, more or less, that I want to kind of share. I've never ever really shared it before, I don't think. So long story short, this is using bar chart. Bar chart has had this forever. It's their own proprietary strategy. I've kind of built my own version of this into eSignal that works the same way, more or less, just with different data set and how I want it to work. But this tool works amazing. I use this forever. And I looked it up again this morning and they still have it, which is pretty awesome. So this is a momentum chart, the dollar BCMM. How do we get here? I'll just walk you through a really interesting way to know when the market should have a bit of a pause or pullback and or a bottom and bounce in the market. So if you go to bar chart homepage, if you go to stocks, you'll click on the drop down, go to market momentum, and then just kind of scroll down. Bar chart has got tons of great stuff, but click here under market performance indicator, and that will bring up this indicator. And of course, naturally, let's go to full chart. Whoop, full chart. Now, if we go and we take a look at this from a 3 month standpoint, the way I look at this is the 100 mark, the center line. You think of it as like zero. Nothing has moved. If you go up here to 101, that is like the majority of stocks have moved up 1%. That to me is a threshold. So I'm just going to draw a line on here. Let's draw a horizontal line. So there's a line there. I'm going to draw a line at minus at 99, which is a 1% move to the downside on the majority of momentum stocks. And then what I like to do here is the way this works is if the market is trending up, like say we're in an uptrend, if we were to look at let's just look at the SPY and look at our 30-minute chart. Well, if the bars are green on our 30-minute chart, or if we even just go over to our ACS strategy, if the market trend is up, if we have green bars, then what you want to focus on with this strategy is whenever the market gets oversold. Now, this is for short-term traders. These are momentum plays. You don't actually have to trade them, but you can just know when the market is short-term oversold or overbought and when there should be a bounce or a quick pause or pullback, just so you're mentally prepared. And that's why I have such a level head when we go into these markets that are like chaotic and huge gaps to the upside, the downsides, and huge sell-offs. We've got our panic selling indicator, our overbought, oversold indicator on our 30-minute chart. But this thing is an easy way to look at it as well. So for example, we'd only be looking for these oversold levels. Whenever this market ideally closes down below these levels, which kind of the last time here was 730. I'll just overlay an indicator on here. We'll just do a moving average. And we'll just do one period just so we can see with a line kind of where that is. I'll throw some color on it and apply that. And then let's compare it to the S&P 500. So I'll just put in SPY because I prefer ETF that everybody trades, SPY, and I will apply that. And I think I might just drop this into its own pane, new pane down below. It's kind of dwarfed. But so what we're looking at here is, I'll see if I can I only got this far this morning when I was playing with it, but I'm going to try drawing on here. Long story short, when the blue line, the daily closes below 1%, below 99 or above 100, it's usually a short-term extreme in the market. I'll just see if I don't know how to zoom in on this, but long story short, we have a bar. We're in a new uptrend as of, let's just pull this back. Sorry, guys, I'm all over the place here. 813 is when the markets went into an uptrend. So 813. So this is where the new uptrend started. So more or less, we're looking for any kind of pullback below this level over here. Now, we haven't had any of these at this point. We did have an uptrend back over here. And if you do notice, whenever we had this close down here, because this was an uptrend up until that point, whenever the market's there, you usually need to expect the S&P 500 on the bottom chart is going to put in a bottom eventually and bounce. It's usually very short term, very small trades. Here we had another one close. The market had a pullback. It closed down here. We had a tiny little bounce that day. We had another one the following day. and then it put in a significant low. Over here, it went from an overbought. When it closes above, you got to expect the market to pause or pull back. It doesn't mean you sell short. It doesn't mean you close a position. Just expect short-term weakness. And so it went from that to the next day. It only really went sideways, but it actually said it was oversold and ready for another bounce. So it gives us these short-term bouncing levels. Now this is where we had a market reset and the trend exited. So we kind of ignore this cluster. But what you're looking for is each time when we're in an uptrend, if it closes above this line, just expect the market to have a bit of a pause or a pullback. And if so, that is perfectly healthy. It's simply because there was so much momentum with the majority of stocks on the previous day that there's going to be some profit taking. There's going to be a bit of a pause. Usually, you don't see big money move into the market day after day after day after day and drive the market higher. You'll see a wave move in, they push the price higher, and then they step back and let the price kind of take a breather, a pause, fade back down before they want to usually move back in. And so the whole takeaway here, and I don't know if you guys find this useful or not, but it tells you, like, for example, yesterday the market closed way above it. And today is a flat day. And it should be. The market, it was just overdone yesterday. It was a huge move. Everyone piled into small and micro caps, really into the broad market. And so today's just a pause, a breather kind of day in general. So anyway, that's kind of a little trading tip to look at, just to identify when the market's a little overdone, a little underdone, and it'll just, half of trading, actually probably like 90% of trading is a mental challenge. It's a mental game. And if you know when the market's a little overdone and a little bit of a pause is in store, or when it's oversold and maybe it's ready for maybe a little bit of a bounce, just knowing that and watching the markets allows you to stomach pullbacks and pauses. And on both, when it's overdone and there's a bit of a pullback in the market, you're not panicking. You're like, well, it was just overdone for a couple of days. It needs a little bit of a pullback. And then when it does pull back, and probably we're seeing panic selling on the stock market on these type of days, you'll be like, well, there's panic selling and the market is now oversold based on this indicator. We'll probably see it find a bottom and start to bounce. So these little tools, even if you don't trade them, this isn't like easy to trade, but it does give you that mental picture. It gives you clarity. It puts you in tune with the ebbs and flows of the markets. And when you are in line and what you think and feel happens more frequently over and over in the markets, you feel like some people feel like they have control. You might not, you don't have control of the markets. We never do, but you feel like you can follow it and you're following it with clarity and goals, and you're not really chasing it with emotions. You're not getting dragged around from, oh my gosh, I'm missing out, to, oh my gosh, I got to get out. Like these little tools really help us navigate that. And that's really what this 30-minute chart also tells us to do when we go back and look at these tools. And again, this is in the book, Technical Trading Mastery, where I've put these in here. It tells us when the market gets a little bit overdone and that there's panic selling. The market's sold off. There's huge panic. Also, the market from an oversold indicator is oversold, meaning it's in an uptrend. When it's oversold, there are buyers that step in and say, we need to accumulate. We need to keep building our portfolio. Institutions will step back in and drive things up. Sometimes when we're in an uptrend, we will get these overbought market conditions. And knowing when we get overbought just means the market could just trade sideways for that session. That's it. Or it might, even up here, it got overbought again. And then really the market really traded sideways for a couple sessions. Kind of got a little bit really funky analysis over here with the Fed meeting. But overall, these things just tell us the oversold, kind of overbought. In an uptrend, if you are a short-term trader, you'd be looking for oversold, conditions and panic selling. You could add. And then when you see the market run up and get overbought or get over, we see FOMO, you could trim some position off. You could actively trade these. And that bar chart also helps. It's one other thing that you can apply in here to be like, oh, this is an oversold day, and oh, this is an overbought day. So hopefully that kind of gives you guys some insight. Again, this tool is play with it. With the small cap stocks, it works really well also. This is the S&P 500. This is kind of based on smaller stocks. So it actually represents like the Russell and probably the IWC, the micro caps, potentially even more accurate. But it gives you a general feel of just the positives are overbought, oversold. So anyway, those are kind of two little kind of trading insights and ways to look at the markets going forward.